Kaustubh Belapurkar is here to tell us about how the fund action has been in the month gone by. And not bad, Kaustubh. You know, it's impressive the way the markets have digested the state election verdict, or for that matter, the RBI governor stepping down before his term ended.
Yeah, absolutely. I think, we've had a fair bit of volatility through the year, but, the thing that we keep saying is that money is still flowing into, from retail investors. So managers have a fair bit of ammunition to continue to keep buying, although November was probably slightly more muted. October was much more exuberant from domestic money managers. Given the amount of money they had lying around, obviously stocks had corrected quite sharply. But November wasn't too bad either. Certain sectors did see some selective buying in November.
Like?
So we had technology that again saw a fair bit of uptick. So you would see the likes of TCS, Infi, some of the smaller, the mid-cap names also propping up in the buy list. Financials continues. In fact, the good thing about financials is not your HDFCs or your Kotaks, but rather Axis saw a fair bit of buying. ICICI continues to see buying, which is good.
Yeah. In specific, any trend that you're seeing building from a fund inflow perspective? What I essentially want to highlight is that you think money is coming into large caps more versus mid caps. You've spoken about themes, but within that also, any particular trend that stands out?
Sure. So I think there are a couple of trends that, which are very interesting. One is clearly there's more money flowing into large and multi-cap sort of funds, which is largely focused towards the large cap sort of side. And even when you look at the way managers have been really pegging their portfolios over the last year or so, it's clearly moving slightly more towards large caps where they have the flexibility. So I think that's going to continue for some time. And flows, and that's the other bit which, we always try to break it down into seeing which are the more consistent flows, what they call SIPs. That number continues to grow, but the lump sum flows is a little bit more volatile given the way markets have been, over the course of 2018. So November, again, there was a little bit of a pause on lump sum flows. When markets correct, we might see that coming back up, but SIPs continue to be the bedrock of domestic flows, almost $1 billion on a month-on-month basis.
Okay, so you're saying some of the banks have seen more buying as they did in October as well. That trend remains, and IT as well is held up. Where else are you seeing some large significant flows coming in?
So the other interesting bit that we saw in November was the re-emergence of some of the industrial names, so L&T, Bale, Siemens saw some buying. Now it's not large, but we've been seeing either flattish or marginal selling in these counters for the last couple of quarters. So I would see that maybe as a first sort of sign of at least a couple of these large names getting some flows in from managers.
Okay, I'm looking at some of the mid-tier technology names seeing traction. Is that here to stay?
I think it's been a little bit here and there. When you look at it, clearly Infi and TCS still remain the sort of consensus buys on the street. And, within, the other names really, Wipro, we've seen continued selling. Some of the large cap names have been kind of flattish, but on the mid-tier names, some of them keep propping up, but it's not consistent buying. So I think it's, when you see some marginal corrections, perhaps you can, managers go and add some positions, but it's not to the level of what we're seeing in some of the large cap names.
Okay. Also, autos, there's much talk about how the cycle might be peaking. We've seen some profit taking happen there. I don't see them as top of the list. So essentially, there is some truth to the fact that they're not finding as much favor.
Absolutely. In fact, if you look at autos in the previous month and even the months before that, Maruti's continuously seeing some selling that's happening. The likes of TVS, if you look at the auto anchors, your Bosch, your Motherson Sumi, again, we've seen some selling on these counters. So there isn't too much buying. And like you rightly said, I think the festive sales have been probably disappointing, and, managers are going to take a little easy on these counters. At least that's the trend that we're seeing.
What's happening with telecom? Although, the trend has only emerged in the last couple of trading sessions, but are you seeing any leaning towards Bharti and Idea?
Not so much. At least the data what I have till the end of last month actually shows that Bharti continues to be sold. Vodafone Idea also, there was some selling. Again, not major, but there's been some selling in these counters. There's been pressure obviously on the stock prices, but managers are still, there are certain managers who are fairly positive on the likes of Bharti. We've spoken to some of them, and they continue to believe that this will play out. Maybe it's delayed, but ideally it should play out over the next couple of years.
We are closing out 2018. Given all the data that you've collected for the year, what are some of the highlights that you think can kind of spill over into 2019 as well?
I think one of the things that's happened is, given just the level of volatility we've seen, and at least when we talk to managers, they expect that this will probably continue at least into the first half of 2019. So they are going to be adding up some defensives and that's going to happen. So likes of ITC will continue to see buying. I think technology is one area where there's a lot of focus that's come in. We've seen a fair bit of buying. We've obviously seen the prices go up, but whenever there are corrections on those counters, we will continue to see buying. I think banking remains clearly one of the large focus area, but maybe that shift is happening from your erstwhile favorites like HDFC. While you see some marginal buying in HDFC, it's not been very significant through the year. It'll probably move to the likes of Axis and ICICI, where you're clearly seeing a turnaround now of the management. So there's more conviction that's building on these counters.
What could emerge as the dark horse, you think, in 2019?
I think selective pharma, and that's a counter. People have seen. There's been some interest, and then there's been a lot of headwinds coming. But selectively, we've seen some trickle of positive news coming on, US FDA giving some approval, some clearances happening. So I think that could be a counter that, again, it'll be very, very selective, but, that's some space that we're seeing from managers of interest, which could really play out in 2019.
I want to also understand, do you think that the event risk globally and locally, whether it's general elections, whether it's China, US trade talks, Brexit, do you think that those would have a meaningful impact on flows as you see them in MFs?
Yeah. So I think that's, it's been in play now, for 2018. That's been one of the large overhangs of the market. But like I said, there have been elements of, consistent flows, the SIPs. We haven't really seen that slowing down. And in fact, when I spoke about the lump sum flows, you can clearly see that when there's a market correction, investors do pump in a little more money into the market, buying on dips, as we'll call it. So I think that's a sign of maturity, maybe early signs, but that's good to see. I don't know what's going to happen if there's a really sharp correction in the market. I mean, fingers crossed on that, but I think retail investors have kind of woken up to the equity story, and long-term money is coming in.
Right. Just final question from my end on NBFCs. I see Webco Home Finance. There's been a fair amount of volatility in that stock. What is the approach with the financing names?
Yeah, so they've been actually quite conservative with, the NBFC, most of the managers, even from the start of the year, given where valuations had headed. But I think Webco, there are a couple of factors. So one, obviously, just the numbers that are reported, better net asset quality. That is one of the play. But also, more importantly, you looked at the regulator allowing a certain sort of, sell down of assets, beyond 5 years. They can securitize those assets, which is a positive because then it kind of reduces the asset liability mismatch to the likes of Webco and some of the others. And this is a very selective play that happened on this count.
Okay, Kaustubh, great to have you on the show. Thanks so much for taking the time out and joining in.